Um, we want to have a fresh look at what is happening here. So we scale up into, let's start from the weekly time frame. Let's actually see what has been going on since the beginning of the year. Well, you can see on the weekly time frame, the first thing I was able to identify here on the weekly time frame is a very strong and uniform bullish trend line. You can see what has been happening since May of 2020 as price has continued to respect that bullish trend line. You can see how I was able to connect the series of higher lows. You can see we had one here in November of 2020. We had one around here later parts of last year, and we had one here December last year, and right now price is right back within that zone. So with the current structure we have here right now, it is obvious that price action has been on a very strong bullish momentum. And if we zoom into the current structure we have here, we can see since the impulsive move started at the beginning of the year, we can see how we had this impulsive move to the upside, and it appears price is going through a retracement phase that has guided price right back into this bullish trend line here. And what is going to be our expectation this week? How we're going to be having a trend continuation right from this point to the upside, or is there a possibility that we could be seeing price break down that bullish trend line in the form of a retest of structure to send price crashing to the downside? So these are the scenarios we want to be looking forward to this week, and want to see how we will be getting ourselves prepared to take advantage of that move when it finally matures. So the first thing I was able to do here on the weekly time frame is to identify the key level at the $85 mark. And the reason why this key level is cited at this area, I will explain to you in a moment. If we look at the structure here and look at what has been happening since the later part of last year, we can see that this $85 mark at one point in time has been a determinant of selling momentum on this market. We can see we saw multiple rejection between October of 2021 and November 2021. We saw multiple rejection of this level before we finally saw this bearish move to the downside. So that is one point there. Then during the early days of this year, we saw an outright breakout of that level, which sent price going to as far as the, let me see where that is, as far as the $129 mark. We can see price move to as far as $129 mark here after we saw price coming back in the form of a retracement phase of that previous impulse leg. And right now, if we look at what we shared here, you saw this level here, and right now price is right back at that level. See what happened during the course of last week's trading session. We saw a sharp rejection of that level. We can see hereby this candle closing in a candle that looks like a hammer candle, giving us a possible bullish momentum that will be evolving from that point in time. And look at how this key level also shares a confluence with the bullish trend line we were able to identify on the weekly time frame here. So we have quite a lot of confluences around this area that is supporting a bullish momentum, but that doesn't mean that we should jump into a conclusion that we are going to be having a bullish momentum here, that is, we're going to be seeing price continue to the upside from this point, because right now we are right on a bullish trend line, and we all understand that when price is oscillating right around a trend line, we want to be mindful of how we jump into trades. We want to look out for at least significant confirmation that will support the direction we are going. As from this point, there is still a possibility that price could still break down that bullish trend line, where a retest of structure could send price to the downside. So to have a better perspective into what is happening on the US oil, it is appropriate that we scale down to a much lower time frame where we will begin to see things more clearly. So scaling down to, let's say, the 4 hours time frame here, what do we have? This is what I shared with you on the weekly time frame. This is the multiple rejection we cited. This is the rejection we cited on the weekly time frame, and you can see it appears we're having a bullish momentum as we saw price move up right back above the bullish trend line. Sorry, yes, above the bullish trend line we identified on the weekly time frame, and right, price back down into the trend line. We saw this move, then we saw another rejection of this trend line in the last hour, and right now we might be seeing a breakout of the structure. Now, before we go further into this, another thing I also want to share with you here on the 4 hours time frame is the structure I was able to identify since on the 13th of July, or 13th of June rather. We can see how price has been finding lower lows and lower highs. We can see how that has been happening. So one thing I did here was to connect the series of lower lows and lower high to form this bearish trend line. So we have this bearish trend line here, which is something we also need to look at going into the new week. If we look at the bearish trend line here, with this sharp rejection of that bearish trend line during the later part of last week trading session here, there is a possibility that price could likely want to respect this bearish trend line one more time with an intention of moving to this point. So now, for us to take a bullish momentum on this, looking at it from the higher on the 4 hours time frame here, we definitely want to be looking forward to a breakout of this bearish trend line to give us a signal that we are going bullish. And if we have a breakout of structure, remember, we are not getting too excited, as we want to wait for price action to give us further confirmation in the form of a retest of either that bearish trend line, the bullish trend line here, before we look out for patterns on lower time frame that supports a trend continuation. So now, to make our job easier during this week, what I was able to do here is to identify a temporary key level that should be guiding our action for this week. So when I look left, I look at the structure we have here. We can see in the last during the last week, we can see how this level has been respected multiple times. We saw it as a demand zone here. We saw multiple rejection here by the sellers, and right now we saw selling opportunities from this level, selling opportunities from this level. We can see what happened here as well. Then it became a demand zone at this point, and it's appeared it's also becoming a demand zone right now in the early hours of today. So with this scenario I just painted here, you will agree with me that this level has been a major determinant of price action. So what we want to be doing henceforth is this. After identifying this key level at $89.50 level, so what we want to be saying is, as long as price continue to oscillate right above the $89 mark, we want to be comfortable in a buying position. And if price continue to oscillate right below the $89.50, we want to be thinking of selling opportunities. So let's start with the selling perspective on this one. So if we see price break down, this is a 4 hours time frame, for instance. If we see price break down this $89 mark, $89.50 mark, which also shares a confluence with the bullish trend line we identified on the weekly time frame, then we should be seeing this as a signal of a possible bearish momentum. And if we cite the signal, remember, we are not getting too excited. We will be waiting for further confirmation, which will likely come in form of either a retest of this bullish trend line or the key level at the $89.50, after which we go down to the lower time frame to look out for patterns that supports a downtrend continuation. And if that happens, that is, we see reversal patterns right below the $89.50 level, we want to take advantage of that selling momentum with a take profit target around the $82, $83, $84 area. And the reason why we are having that area as our take profit target for any selling momentum here on the US oil is simply because if we look further to the left, we can see that we have an impulse leg here. So what I did was to project this impulse leg into the future, such that if we bring out our Fibonacci extension tool and run it through that impulse leg, what do we have here? We aim at the area between the 127.2. Sorry, hold on a second. I'm trying. We aim at an area between the 127.2% and the 1414% extension of that previous impulse leg. So if we have this kind of scenario now, how much we'll be aiming at? About, let's see, right below the structure, we should be aiming at about a minimum of 500 pips and a max of around 700 pips thereabouts on this one. So that is if price tends to move to the downside here. That is if price wants to respect this bearish trend line here. Remember what I said, we want to wait for signals. That signal should come in form of a breakdown of that $89.50 level, which also shares a confluence with the key level here to take advantage of that bearish move. That is that for the bearish perspective. Now, considering, let's go back to the weekly time frame. Considering the fact that we are sitting right on a bullish trend line, and remember how the last week candle closed. The last week candle closed in the shape of an hammer candle, like where I show you, which is a clue of a possible bullish momentum here. I'm of the opinion that we might be having a bullish momentum here on the US oil, considering where price is at this point in the market. So if we scale down to, let's say, the 2 hours time frame now, for instance, and look at what the structure we have here, what I will be suggesting at this point is that we should be expecting price to do a breakout of this bearish trend line to give us a signal, then a retest of either the key level, the resistant level of the bearish trend line here, or the bullish trend line here should give us confirmation to join the rally to the upside. So I'm still tending towards the bullish momentum here. As we can see what has been happening since last week trading session, we can see price has continued to find higher highs and higher low. So I'll be tending towards a bullish potential here on the US oil. So if a bullish momentum finally happens here, where will our take profit target be? Well, if we look at the structure we have here, we don't want to get too over ambitious on this one. So if we look left, we can see that we have a structure around this here that has been a selling niche in the past. We can see we have one here which has been a selling niche in the past, and we have this area which has been a demand zone in the past. So what we want to be doing now is that around the $95 level and the $97 area should be a take profit target for any buy opportunity here on the US oil. So we should be aiming at around, let's say, around 500-600 pips to catch here if price moves in our direction. Now, you would, for those who are not in this trade, what I'll be suggesting at this point is, let's scale down to the 15 minutes time frame and see what's happening. Let's see if we can actually take advantage of this bullish momentum that is already unfolding before our highs. So, hold on a second. Let's see. I want to okay. So since the beginning of the week, that is this week, we have seen a consolidation phase right between the $89.70 and the $89.10 area. We saw this consolidation phase. Price continued to oscillate right within this level. Then we saw a little breakdown, a retest in the form of a double bottom structure. Then we saw a breakout of that structure. So what I'll be suggesting here is to see if we could be having a retracement back into this neckline area. That's our key level at the $89.50. Then we look out for patterns on lower time frame to join the rally. But I think joining the rally from this point in time, where price is at this moment, is also a very good area with a stop loss right around the neckline here. So I think it's appropriate to join at this point in the market. So for the US oil, let's take advantage of this move from this point. If you have any question whatsoever, feel free to drop a word or two in the comment section and let's look at this together. So I'll be taking the next 10 to 15 seconds to look at the comment section to see if we are going to be, if we have any question whatsoever that needs further clarification. Okay, Susie MB, hi. All right. Okay. Gang Speed is asking, is US oil going up or down? Well, I think I just explained to you what my expectations are. Judging from the scenario we saw here on the weekly time frame, where price has done a rejection of we saw how the last week candle closed with a sharp rejection of the key level at its $5 level, and also a sharp rejection of that bullish trend line. I'm of the opinion that we might be having a bullish scenario here on the US oil. And for us to actually sell the US oil in a long-term perspective, we want to see price break down that bullish trend line. Then probably a retest of that structure will give us a confirmation to join the decline. So since that is not happening at this point, I'm still tending towards a possible bullish momentum from this area. So to buttress this fact, we scaled down to a much lower time frame where I was able to identify a structure here that I said we can take advantage of right now. As we can see that price is oscillating right above that $89.50 level. So I told you earlier that if price continues to oscillate right above the $89 level, I want to be comfortable in my buying position. However, in order that I always try to paint two scenarios, and the reason why I do that is simply because if anything contrary to what we have expected here happens, you might be stranded and don't know what to do. So in the other scenario which I told you, I said if we at any point during the New York session today see an outright breakdown of this $89.50 level, which I'm not thinking will happen, but should it happen that we see a breakdown of the $89.50 level, and if you look closely, we can see that we have that bullish trend line we identified on the weekly time frame right around this area. So if we see price break the two levels, then that could be a signal that we are going bearish. And what we want to be doing if we see that is to look for a retest of the structure at $89.50 level, or probably this bearish trend line with reversal patterns on lower time frame, then we can join the decline. But if that does not happen, then we are comfortable with our buying position right above the $89.50 mark. I hope I've made myself clear there. Gang Speed. Okay, Mr. Kang wants us to do ETH. Okay, let's see if that's going to be possible. I will put it in my, I'll write that down.